Hey guys, thank you for joining us for today's episode of Trade the Chain. I just reverted the show name back to that because I didn't have a better name for it. Joining me and Nick, Doug is out today. It is July 5th, and we hope you had a happy 4th of July if you are in the States and celebrate that. And if not, we hope you had a nice day at work, I guess, yesterday. I don't know what to say. Bitcoin markets are open all the time, so there was no market day yesterday. But that also hinders our boy Nick here because he likes to do some traditional economic trends to the crypto markets, and when they're not open, it's like he's walking with a I don't know, a crutch or something, right?
I'm like the three blind mice,
Exactly. But unusual activity definitely going on in the crypto markets, leaving a lot of people skeptical, without conviction on anything they're choosing. I personally have a short trade that's out of the money right now, but I'm going to hand it over to Nick before we get to also the Celsius and the Nexo deal that's going on. I want to discuss that after we hit the big boards. But let's go over to Nick and see what's cooking in the markets.
Honestly, this is one of the tougher situations we've been in. I don't want to say things have been easy recently, but they've been more or less simple. Simple doesn't always mean easy, but there's been kind of less to make sense of when we've been trading these past few weeks. Previously it was very much like, okay, we've got Fed expectations, and crypto market is clearly bloated, and we have all of these issues. So clearly, sentiment matched up with market activity 1-to-1 because it was quite obvious what was happening. If companies are failing and, people need cash quickly, that's called a liquidity crunch and has every time throughout history led to lower price action on the charts. Now, we're at a level that, maybe fair price, and we're still dealing with, understanding what the Fed is doing. More or less, most of that is priced in, i.e. 75-point basis hike. So if we got something less than that at the end of the month, looks good. If we get something more than that, looks bad. If we get that, then it's neutral. So that, everybody's kind of very much in a wait and see pattern right now. But we've got some very interesting things happening in Europe right now in relation to the euro. I'm seeing more and more countries with inflation rates in double digits. So, some as high as, 20, 30%. We're seeing protests. We're seeing collapse of kind of a socioeconomic system in many, less developed nations. And typically that's your canary in the coal mine that things are probably going to get bad in developed nations. So the story today is the euro tanking. I think it's at what, 1.2. It's at like $1 and a few cents. It's
$1.02, and it's
$1.02.
And that's one of the biggest telltale signs going on right now.
Yeah. So and the crazy part is the DXY, the dollar index, is cranking. We are at, I think we're at 106, and I believe there is no resistance on the chart until 120. And when you're talking 106 to 120, you're talking, a 5 to 10 year move. If you go back and look at average moves for the DXY. So, you're talking an intra-decade move that could potentially come in just a few months. This is the 80s again, is what the DXY is kind of showing you on the chart. If you go to DX, and actually I could just pull this up. I didn't configure all of my charts perfectly, but I'm going to go ahead and pop the monthly DXY on, and then we can go ahead and make a little bit of a historical comparison here, just to kind of show everyone what we're living through. I'm sharing my screen now, Alex. I can just do a Chrome tab. Perfect. Is that up? There we go.
There you go.
So, this is quite crazy. The dollar is as strong, or is nearly as strong as it was back in, the .com era. And the last time we had, and it's tough to immediately make this comparison, but very rarely have we had this much green for this long on the chart. And the last time really that happened, other than the mid 90s, was the 80s. And of course, why did this happen? Interest rates, there's an entire historical lesson in the late 70s and 80s that Alex and I can talk about. But Really, it has to deal with how the government dealt with out of hand inflation, and how they quote unquote righted the market after it was very topsy turvy. And back in the 80s, they shoved us into a pretty deep recession to curb inflation and get things back under control, which is why you saw such a crazy spike. So to kind of simplify this, Nick, this isn't the 80s. Yes, I know that. But why am I talking about this in relation to crypto? Well, I mean, look what's happening. Look what has happened since the proverbial crypto top. Literally, we topped in November, which very. I think we're all going to look back on that and laugh just because the whole holiday crypto conversation and all the memes that were happening around then. But you can see this massive inverse relationship, and I don't think this is going to change anytime soon, considering the focal points on the Fed, interest rates, unemployment, and making sure that the economy is good before risk assets are good. And now, historically, risk assets typically do bottom before the economy bottoms, meaning risk typically hits a bottom before GDP hits a bottom. But I don't know anyone who would want to fight this trend anytime soon without, I would say, probably the easiest signal being that the Fed is going to stop quantitative tightening. I think that's the only way we see a true reversal in this trend. And right now, if the markets are going to give us, this obvious of a trend, then I think, it's one that we have to continue to respect and track, very much so. I mean, I previously, if you were watching, TTC and all that fun stuff, then you were, what was this? You were seeing us trade a correlation. I remember we were trading this very heavily correlated. Then we were trading it very heavily decorrelated. And since it has not, kind of come back to correlation, then we have to continue to trade it as it's being given. And right now, that means that if the DXY continues to crank higher, we would expect Bitcoin to continue to crank lower. And clearly, Bitcoin going lower is something we've been talking about, but how low will that go? That's kind of where the conversation is. But if DXY hits 120, I don't know. Bitcoin, Bitcoin 15K, potentially makes a lot of sense there over the next few months, maybe less.
And there's also, that it could. Downside could be accelerated by a lot of FUD, and to what you pointed out earlier happening in the EU. Nick had brought up protests. We have Netherlands, we have farmers protesting. We have the $1.02 to euro. So just traditional economic FUD could just accelerate it. But where do we see the bottom? I don't know. The true cost of Bitcoin, as to Nick's point earlier, it's when we get the leverage out of the system. So we obviously squeezed a lot of leverage out of the system over the last 3 months. How much more do we have to go? Do we have, is it another 1,000 down, another 2,000 down? Are we at price right now? Even if we are, I think what we're going to speak about next is going to affect that as well. And that is Contagion from 3AC and Luna Fallout. So, we're at 886 billion in market cap. That's down $2 trillion. The UK just put out a little bit of a statement today or earlier today saying that there's going to be some quick hitting regulation formation around it as they're concerned for the 2 trillion loss in market cap in crypto. But then there's also some good news, or seemingly good news. Nick, I want to get your opinion on this because we have, let's see here. We have, well, that's not good news, but it is good news. Celsius over the weekend announced that they're slashing 25% of their workforce. And I was going to make that the second topic to speak about. But this is good news because they're tightening the reins at the company. But what do I think is the leading indicator is the fact that they've paid $120 million back to Maker. And this is an interesting thing because people started tracking the payments back, and I think there was 3 or 4 pretty large tranches, and it brought their liquidation price to under $5,000, and it was up at 18 and change just 2 weeks ago. But what are your thoughts on what's going on, Nick? Is this are they being saved quietly? Is there something we're not hearing here?
I mean, clearly they're going through the motions. I mean, so I'm just trying to think about it from an operational sense. Like, if I have, I mean, either they go bankrupt, liquidate everything, and do whatever they can, and then that's just, you're done. Or they scrape together everything that they can and make the best faith attempt at somehow salvaging their business. Now, we were making jokes, when that whole sell pump was happening, and when Bitcoin was completely getting bucked off of 19K, when kind of the whole market was calling for a decrease. We were making jokes, Celsius is trading for their lives. I think, well, it was Celsius and 3AC. We were kind of like, we don't know, but that someone's, that craziness with market action, what happened with Celsius, some of those pumps, all, it kind of would make sense. I would be shocked if key players within both of those areas were not trading for their lives during that point. But
I enjoyed taking some off the table on the scalp trade on the sell short squeeze pump.
I think we were all trading for our lives, but I don't think either of us were having to fund illiquid companies, with those proceeds. So I really don't know what this means, other than the fact that their business is continuing to operate. And I think that's the best news that you can ask for if you were both a Celsius customer and kind of hoping for a, moderate recovery of the crypto market in the near future. If Celsius has 120 million on hand to pay back a loan, maybe things aren't as horrible as they seem. But
I don't know that that's necessarily the case. And unlike some other, Voyager, for instance, it's a privately held company, so things don't have to be disclosed. I mean, maybe they have a suitor in hand or a strategic in hand that's doing this, because $120 million, it's a hell of a lot. It's not just a hell of a lot of money if people are alleging that you're insolvent, but they brought the cost of liquidation down so far below a safe line that they didn't need to do,
Yeah, and like it's one of the hard, because like with these opaque companies, I mean, fortunately we can see this, because like, let's say if like Goldman was in the same scenario, we wouldn't know who their loans are going to, or whether or not they're really repaying them, unless it somehow got reported in the media. So I mean, it's cool that we can see into this. I mean, I consider it definitely a better sign than a worse sign, the fact that they're repaying loans, because bankrupt companies typically try to avoid that. So I really don't know where this is going to lead us to, though. I guess we'll have to continue to see what they do with obviously the remaining portion of the loan, as well as the company. If the company does so, I mean, maybe they're making money from lending. They're clearly not making money from customer-facing operations, or retail-facing operations, I should say. They just slashed a quarter of their headcount, so they're still somehow paying people, humans, their employees. They're still paying off loans. And they're not making any money from retail operations. So one would surmise that they're likely liquidating assets, shoring up their balance sheets, as well as, probably taking a few calculated risks on their, probably their lending side, or potentially their trading arm, and are doing what they can to stay alive. But I don't know what the hell that ends up meaning in 4, 8, 12 weeks time,
Yeah, no, I agree. I mean, the Vasic has a good comment there, saying doing it for the PR and optics, but 120 million loan repayment is an expensive PR campaign, nonetheless. That being said, one of the things that did come across that seems promising, and we'll see how it goes as far as follow through is concerned. We knew Nexo, when Celsius was first having alleged problems, that Nexo came out publicly and offered them an LOI to acquire their business, and that doesn't seem to have taken hold at all. But now we have Vault, which is Singapore-based company lender with 1 billion AUM. I guess a lot of their workforce is out of India, so I don't know whether to call them an Indian company or a Singaporean company or whatnot. But they, after 200 million, in which also roughly 20% of their AUM, they decided to do exactly what Celsius did, and that was to halt withdrawals in any sort of transactional business from the retail front. And it looks like both companies are coming out and saying, they have a deal in hand for Nexo to acquire 100% of this company. So there's hope. Now, I tweeted out this morning just a little thing that I noticed in there, and that was they have this exclusivity clause for going through their ODD, their due diligence on the company, and it's exclusive for the next 2 months. Now, what my concern is I tweeted out saying, listen, this is, seems like a good thing. My eyes are going to be on it. But does a company, if they don't pull the trigger on this, and they have exclusivity for 2 months, that could be too late. I mean, crypto markets move fast. We're talking September. And if they decide not to buy it, this company may have the unfortunate thing to go, well, we're screwed. Damn it. Why didn't we, have other people looking at us? So we have that going on. We also have Voyager, which came out with another tweet saying that they were, working through things still and whatnot. Not really a whole bunch of concrete stuff going on. I know that they hinted at rewards or their reward earn program dwindling down. I wish they'd just give it up, to be honest with you. I loved it in the beginning, as we all did, but we all see what's happening and what was behind it. And right now, I wish the companies would all give up any sort of yield in order to strengthen their balance sheet, because God knows what the monthly payout was for everybody on that. And I'm sure everybody here would agree if they had access to their funds.
Also, just a small kind of like hopium, perspective. If Celsius is repaying loans and restructuring without, ending or fully ceasing operations, then there is a hope for Voyager to do so as well. I just as a little silver lining there. If Celsius is still I honestly had them counted out over the weekend. We were talking about
100%.
So the fact that they're still making good faith operations, gives me some hope for Voyager as well.
I mean, their stock is obviously tumbled. I think it's it's below book value in my eyes. 38 cents down from a high of $20. So this is crazy. Either going to be the biggest bargain or just toilet paper. We all have hopes. We all don't like people to lose their money. I have my own money on some of these platforms that we've mentioned. But the thing is, and I want to hear from anybody, because to my recollection of being in crypto for the amount of time that we've been, Nick, when was the last time you heard of a company that shut down withdrawals and transactions and emerged on the other side?
I don't think I have heard of one.
Never.
I don't.
And if that's the case, there's going to be a lot of explaining to do. But I know I don't mention this. I don't mention this person's name quite often. But Ben Armstrong, Big Boy Crypto, he's been very public about his funds on Celsius. And those are just mouthpieces for the everyday person who has it. So. We'll see what happens.
The crazy part is, we are truly in two different worlds compared to the last, bear market compared to this one. Fortunately, I think another silver lining aspect, Nexo, so crypto.com was paying, Kevin Durant and LeBron James over the weekend to do marketing. They clearly have a lot of money. FTX is literally, sprinkling money on companies. They have a lot of money. Nexo is talking about bailing out Vault, maybe not a lot of money, enough money. So, the fact that the Contagion isn't so deep that the literal upper echelon, there is still, I guess the best way to say it is there is still an upper echelon. There's still smart companies. They're still operationally solid, and there's still liquidity running around the system. There's just less, and we have a lot of opacity compared to how we felt a few months ago when everything seemed fine and dandy. So it's good that we have power players who can step in and mitigate this risk, because We 100% did not have that in 2018. And I think even some of the larger exchanges went through very tough periods, not Voyager and Celsius and things like that, but they did go through very tough periods, after the 2017, 2018 run.
Yeah, no, you're absolutely right, and we've seen this. We've seen this in traditional markets. Back with long-term capital markets and the bailout there, and that was comprised of a lot of smart individuals. And now we see a bunch of risky assets that were packaged up here, and investments made. So, where do you see real quickly before we go, as I get nudged out of my short? Which I don't want to talk about too much. What do you see us in the short term right now, as far as market going through the rest of the day into Tuesday?
So, in relation to what I just discussed on the Daily Show, my short thesis, at least my immediate short thesis, was bucked as the DXY fell. What did the DXY fell about 0.14% since I was live for the Daily Show. And I told everybody if the DXY falls, you should expect, probably Bitcoin equities to rise. If DXY rises, you should probably expect equities in Bitcoin to fall. Right now, the DXY is, it's slightly falling. I wouldn't call it tumbling, but it's certainly coming off of its highs. And now we're seeing Bitcoin as well as equities reach their highs. And now I think this is going to be a very fun kind of exercise, because we may find the DXY at some sort of short-term support. So I'm going to go ahead and share my screen really quick and try to go back and forth and show both the fun as well as the difficulties of trying to trade these assets, especially in the current position. So when I first was speaking, the DXY was here. DXY is now here, which is the 100-day moving average. Now, you would typically expect some sort of bounce here, potentially back to the top of the trend, typically, at least at bare minimum, filling the gap, as we call it, with the 50-day moving average here. Now, if we're looking at the Bitcoin 1 hour, we can see we have both the 200-day moving average and the VWAP here, which it's sitting just under the VWAP and, in between that gap. If we look at equities, 5-minute chart, we're just above the 5-minute 200-day moving average, moving slightly higher, beginning to become overbought. We are also pressing through resistance we've pressed through the 100-day moving average. We're now at the 50-day moving average, and this is the 200-day moving average on the hourly chart. I did say that, on the Daily Show, and this is why I typically do not fade this type of technical formation. We have bullish divergence here. If you would have played this bullish divergence from the knuckle, you would be up, and this is just from an equities perspective, but you would be up nearly 2%. If you would have played the bullish divergence on Bitcoin this morning, which I should note was in the Trade the Chain community prior to the market open. So if you are a Trade the Chain member, you received this trade and no one else did. And so if you would have traded that, then you would have had a 2% trade as well. So that's the trade. Now, the difficulty of where we're at now is that DXY is potentially sitting on resistance, with a gap to potentially close. And Bitcoin, I should say, DXY is sitting on support, not resistance. Resistance is beneath. Bitcoin is sitting underneath resistance. So what we're seeing right now, what we have to make sense of is, does it move back to the top of the trend and try to tag, 20.2, maybe 20.4 again? Or do we end up falling back over and hit the POC, potentially the lower end of the trend, and where we're at now? And this is, probably the most hardest part to trade is when an hourly RSI is sitting right in the center. And probably your best decision is to say, I don't want to trade that, considering, stock looks like it may move higher, MACD, but this could also be a rejection area, especially if the DXY recovers here. So again, very much, same thesis on the call earlier. If DXY continues to head lower, then I would expect Bitcoin and equities to continue to head higher. If DXY heads lower, I would expect the 200-day or the 200 moving average on the 5-minute chart to act as support. And if it does act as supports and somehow either makes it back to the top of the range or closes that gap, then that's when I would expect Bitcoin to eventually relax as well. So since we are busting above this, and of course we still have to wait 25 minutes for the candle to close, we cannot say for certain that this will break higher, as we've seen plenty of fake outs in our time. But the fact that the equities are looking also strong, busted through that 200-day moving average and are now, trying to close above it and move higher, I think one can surmise that stacking shorts at this level may not be the best idea unless we get a clean, support rise from DXY. So, very, very, in my opinion, we're kind of in the center of an ideal trade. You would want to short. I think, ideally you would want to continue to short, 20.3, 20.2, somewhere up here. And ideally you want to continue to long probably 19.4 until one of these trends breaks. I mean, literally that if you would have done that since Friday, you would have had a pretty decent weekend. And so I don't see that changing anytime soon, mainly because we're also sitting in a symmetrical triangle. And every time we've sat in these, we've literally just done, and I'm not going to draw it because it takes too long, but we've literally just
just look at that bullish engulfing candle that's going right through the
exactly.
It's going right through the line right now.
Yep. And if we look at the ticker tape, so this is interesting as well. I would expect this to probably get sold off. Typically when you see this much coordination, and look, perps are, oh wow. So I would expect after this candle for things to probably roll over. I think it's a 5-minute candle on both. Yeah. So you can see massive coordination. Clearly perps are leading, but spot likes this price. Now you're going to start to see a lot of red pour in. A lot of short liquidation. Well, not a lot, but we have about 500 grand in short liquidations already.
Oh yeah.
So this is I like to use this, especially when I'm trading short term. It just gives you a really good idea of who's buying and what's happening, within the order books. It's not the most perfect view, but typically if you're watching me, I try to at least spend 5 minutes and kind of just go over what happened over the past few hours. But generally, this isn't perp led because it's all kind of coordinated at the same time, and it does seem that kind of everything led together. But when we do see this much coordination together, very rarely does it continue to fly, meaning it'll probably get, at least sold off back to, support level and potentially some consolidation. So easiest example is this one right here. If you look at, Delta spot and perps along with everybody else's spot and perps all bought, and then we sold off and went back down from, from 700 all the way down to, low 5. So whenever this candle closes, and that's why you wait for the close, because we're looking at 5 minutes right now. Whenever this closes, I would expect to see some red come in. So, and that's basically how you would play it. But this is really only good for short-term movements, because you can't really get a whole lot of information out of, order book movements for a long-term spectrum, unless you're tracking like exo charts or something like that, which is a whole nother learning lesson.
All right. Well, thank you very much, Nick. Also, I saw a comment about Tether and over on the side there. I'll say, listen, I don't use Tether anymore. I've been out of Tether for a handful of. Yeah, I used to use it all the time. I mean, back in the day, that's what everybody used. I don't like really what Tether, kind of things they do, and from an optics point of view. But I don't think Tether has a problem. I mean, they verified, they have overages on money as far as what their liquidity to peg is. And I have that information actually somewhere because I just updated it about a week and a half ago. So I will try to put that up maybe for tomorrow's show. But hey, it's world's largest stable coin by AUM. So I'm not sure we can call it fake just yet.
Yeah, I'm not using it just out of precaution because of what's going on. It just
100%.
But I don't think that I'm not worried that it is going to fail. I'm just taking the precaution that there is a safer place to have my cash.
Yeah, agreed. All right, folks, don't forget to catch Nick on the Daily Show over at the Trade the Chain channel itself. And please don't forget to hit the like and subscribe button here. We'll be back tomorrow at 2 o'clock Eastern time with more updated market news. Thank you very much, folks.